You remember the check, the $1,200 stimulus payment that arrived in April 2020 when the world was locked down and the economy was collapsing and everyone was terrified. You remember feeling grateful, maybe, or thinking it wasn't enough, but at least it was something. At least the government was helping during the worst crisis in generations. That check was part of the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act, the largest economic relief package in American history. They said $2.2 trillion to rescue the economy and help ordinary Americans survive the pandemic. But here's what they didn't tell you here. What was buried in Federal Reserve balance sheet data that almost nobody reads and even fewer people understand while you were getting $1,200. The Federal Reserve created $4 trillion out of thin air and gave it to banks and corporations in Wall Street and the largest wealth transfer in human history. $4 trillion. That's $4,000 billion. That's $4 million. And you got 1,200 while they got 4 trillion. And this isn't conspiracy theory or exaggeration or partisan politics. This is a documented fact in the Federal Reserve SO and H.4.1 statistical release that anyone can verify right now. The ratio is so obscene it seems impossible. You got $1,200 and banks got $4 trillion. That means for every dollar you received, banks received $3.3 million, and the entire transfer happened in a matter of weeks while everyone was distracted by a pandemic and lockdowns and fear and chaos. This is the story of the greatest robbery in history, executed in broad daylight under the cover of emergency relief. And the reason you've never heard about it is because the people who did it control the narrative and own the media and write the textbooks that will explain to your children why inflation destroyed your purchasing power and why you reap poorer now than you were before the pandemic, even though stocks hit all-time highs and billionaires doubled their wealth. The Federal Reserve isn't federal and has no reserves. It is a private consortium of banks created in 1930 on Jekyll Island in secret by the most powerful bankers in America who wanted the ability to create money and control interest rates without government interference or democratic accountability. The Federal Reserve Act was passed on December 23, 1930, when most of Congress had left for Christmas. Breaking it gave a small group of private banks the power to issue currency and determine monetary policy for the entire United States economy. For over a century, the Fed operated in relative obscurity, adjusting interest rates slowly and carefully, buying and selling Treasury bonds in what's called open market operations, maintaining the illusion that the dollar was stable and the system was sound. But in 2008, during the financial crisis, the Fed revealed its true power when it created $1.7 trillion to bail out banks that had nearly destroyed the global financial system through reckless derivatives, trading, and subprime mortgage fraud. And nobody went to jail, and the banks got bigger and more concentrated. And the precedent was set that when crisis comes, the Fed prints money and gives it to banks while ordinary people lose their homes and their jobs and their savings. The 2008 bailout was called quantitative easing, or QE, a euphemism designed to make money printing sound technical and necessary instead of what it actually is, which is theft through inflation. The debasement of currency that steals purchasing power from everyone who holds dollars while transferring real assets to those who receive the newly created money first. But 2008 was practice, 2008 was the test run, 2020 was the real heist. The moment when the Fed threw off all restraint and printed more money in 3 months than it had printed in the previous 100 years combined. March 2020, the stock market crashed. The S&P 500 fell 34% in 23 days from February 19th to March 23rd, the fastest bear market in history as COVID lockdowns spread across the world and economic activity ground to a halt. Credit markets froze, corporate bond markets stopped functioning, repo. Markets that banks use for overnight funding seized up completely. And for a few terrifying days in mid-March, it looked like the entire financial system might collapse worse than 2008, worse than 1929. A complete systemic failure. The Federal Reserve responded with overwhelming force on March 15, 2020. The Fed cut interest rates to zero and announced $700 billion in quantitative easing. On March 23rd, the Fed announced a limited QE, saying it would purchase Treasury securities and mortgage-backed securities in the amounts needed to support smooth market functioning, which is Fed speak for. We will print unlimited money to prevent collapse. The Fed also created 9 new emergency lending facilities with names like Primary Dealer Credit Facility and Money Market Mutual Fund Liquidity Facility and Commercial Paper Funding Facility. Bureaucratic names that hide what they actually do, which is funnel newly created money to banks and corporations in Wall Street. Within 3 months, from March to June 2020, the Federal Reserve's balance sheet expanded from $4.2 trillion to $7 trillion, an increase of $2.8 trillion in 90 days. And by the end of the year, the balance sheet was $8.9 trillion, representing $4.7 trillion created since the beginning of the pandemic. $4.7 trillion. Let that number sink in. The Fed created $4.7 trillion in less than a year. And where did that money go? If you're beginning to understand that while you were locked down at home, worried about a virus, and grateful for your $1,200 check, the Federal Reserve was transferring trillions of dollars to the wealthiest people and institutions on earth, then you need to see exactly how the mechanism works and who benefited. Subscribe now, because what comes next reveals the specific names, the specific amounts, the specific ways they structured the transfer. So you wouldn't notice. And once you see the full picture, you understand why inflation is destroying your purchasing power right now, and why your $1,200 was actually paid for by you through the invisible tax of currency debate. The greatest theft in history wasn't committed with guns or force. It was committed with monetary policy that 99% of people don't understand, and that's exactly why they got away with it. The $4 trillion flowed through multiple channels simultaneously. First, the Fed bought $2 trillion in Treasury securities, which means the government borrowed money and the Fed printed money to buy the bonds, which means the government can spend without raising taxes because the Fed just creates the money. This is how you get to point to trillion-dollar stimulus packages that nobody votes to fund, because the Fed prints the money and buys the debt. Second, the Fed bought $1.3 trillion in mortgage-backed securities, which are bonds backed by home mortgages. When the Fed buys these securities, it drives down mortgage interest rates and inflates housing prices, which helps people who own houses in banks that service mortgages, but makes housing unaffordable for young people trying to buy their first home. Third, the Fed created the primary market corporate credit facility and secondary market corporate credit facility, which bought corporate bonds directly from companies. The Fed literally printed money and bought bonds from corporations like Apple and Microsoft and ExxonMobil and Boeing companies with billions in cash reserves that didn't need emergency loans but took Fed money anyway, because it was essentially free money created out of nothing. Fourth, the Fed expanded repo operations where banks can exchange securities for cash overnight. The repo market ballooned to over $4 trillion in daily transactions as banks used Federated money to maintain liquidity and continue trading. Fifth, the Fed created the Main Street Lending Program, which supposedly helped small businesses, but the requirements were so restrictive that most small businesses couldn't qualify, and the majority of money went to medium and large companies instead. The total comes to approximately $4 trillion in direct Fed money creation, plus another trillion in lending facilities that never got fully utilized. And here's the crucial point that nobody talks about. The people who received this money received real purchasing power before inflation hit. They used Fed-created money to buy real assets like stocks and real estate and commodities before prices adjusted upward, while you received $1,200 of money that was already losing value as the Fed printed trillions. The stock market recovered instantly. From the March 23, 2020 bottom, the S&P 500 rallied 92% in 16 months, reaching all-time highs by August 2021. This happened while unemployment was still elevated and small businesses were closing permanently and millions of people could pay rent. The stock market became completely disconnected from the real economy because stock prices are unmeasuring economic health. They're remeasuring the quantity of money the Fed is printing and directing into financial markets. Jeff Bezos' wealth increased $100 billion during the pandemic. Elon Musk's wealth increased $250 billion. The combined wealth of U.S. billionaires increased $2 trillion from March 2020 to March 2021, while median household income fell and poverty increased and 40 million Americans filed for unemployment. This wasn't an economic recovery, it was theft disguised as monetary policy. The Fed created trillions of dollars and funneled it to asset owners while giving you $1,200 and calling it relief. And the mechanism was designed this way deliberately because the people who control monetary policy are the same people who benefit from monetary expansion. The Federal Reserve Board of Governors comes from Wall Street and returns to Wall Street. The revolving door between the Fed and Goldman Sachs and BlackRock and JP Morgan is well documented. These are non-public servants. They representatives of financial capital managing policy for the benefit of their class. But the theft didn't end with the money printing. You paid for it twice. First through inflation that destroyed your purchasing power, and second through the actual checks that came out of your taxes. The CARES Act that funded your $1,200 stimulus was paid for with borrowed money the government issued, Treasury bonds to fund the spending, and those bonds have to be repaid with interest, and who pays that debt you do through taxes for decades to come. So you received $1,200 that the government borrowed in your name, creating debt that you repay with interest over your lifetime, while the Fed simultaneously created $4 trillion for banks that will never be repaid because it was on loans. It was permanent monetary expansion. You got temporary borrowed money that increases your future tax burden. They got permanent free money that inflated asset prices, making them richer. And the inflation that resulted from printing for $1 trillion means your $1,200 buys less today than it did in 2020, while the assets they bought with their $4 trillion have appreciated in nominal terms as the currency. You were robbed coming and going, robbed through debt in your name, and robbed through inflation that steals purchasing power. And the entire operation was legal because the people who wrote the laws are the people who benefit from the system. The inflation arrived exactly as predictable as gravity. When you print $4 trillion in a year, prices rise because there are more dollars chasing the same amount of goods and services. This is basic monetary theory that the Fed claims to understand but conveniently ignores when it benefits banks and hurts ordinary people. The Fed and Treasury Secretary Janet Yellen insisted throughout 2021 that inflation was transitory, meaning temporary and not a concern. They said supply chain issues were causing temporary price increases that would resolve as the pandemic ended. But anyone who understood monetary history knew that printing trillions of dollars would cause inflation that would persist for years. By the end of 2020, one official inflation measured by the Consumer Price Index was 7%. By mid-2022, it peaked at 9.1%, the highest inflation rate in 40 years, and real inflation measured by the methodology used in 1980 before the government changed the calculation to make inflation look lower was closer to 15%. Your groceries cost more, your rent increased, your gas prices doubled, everything got more expensive while your wages barely budged. And your $1,200 stimulus was spent long ago on bills that never stopped coming. The Fed finally started raising interest rates in March 2022, but by then the inflation was embedded in the system. Prices had reset upward, and they never come back down. Shrinkflation became permanent as companies reduced package sizes while maintaining prices. Wage growth remained below inflation, meaning you got poorer in real terms, even if your paycheck grew nominally. The purchasing power of the dollar fell 20% from 2020 to 2024, which means your $1,200 is worth $960 in 2020 purchasing power. You lost $24 per 100 from inflation caused by Fed money printing, while the assets that banks and billionaires bought with their $4 trillion appreciated in nominal terms because asset prices inflate faster than consumer prices in a monetary expansion. Do you see how the game is rigged? Do you understand now why you feel poorer, even though the news says the economy recovered? Do you see why billionaires doubled their wealth during a pandemic while you struggled to pay rent? The system isn't broken. It's working exactly as designed to transfer wealth from labor to capital, from ordinary people to financial elites, from the powerless to the powerful. And the mechanism is monetary policy controlled by an unelected institution that serves the interests of private banks while maintaining the fiction that it operates in the public interest. The Federal Reserve has one job according to its dual mandate, which is maintaining price stability and maximum employment. But in practice, the Fed's actual job is protecting banks and inflating asset prices for the wealthy. Employment and price stability are secondary concerns that get sacrificed whenever they conflict with protecting financial institutions. You got $1,200. They got $4 trillion. You pay with inflation and debt. They profit from asset appreciation. And the next time there is a crisis, the Fed will do it again because there is no accountability, no democratic control, no mechanism through which ordinary people can influence monetary policy that determines their economic fate. The Fed governors are appointed by the president and confirmed by the Senate, but once appointed, they serve 14-year terms and answer to no one. They meet in secret, deliberate in secret, and execute policy that affects hundreds of millions of people without meaningful public input. This is how oligarchy functions in modern America, not through kings or dictators, but through technocratic institutions that concentrate power while maintaining democratic aesthetics. The Fed is more powerful than Congress because Congress must appropriate funds that the Fed can simply create. The Fed is more powerful than the president because the Fed controls monetary policy that determines economic conditions under which every administration governs. If this has revealed that you were robbed in plain sight, that your $1,200 stimulus was a fig leaf covering the largest wealth transfer in history, that the inflation destroying your purchasing power was caused deliberately by Federal Reserve policy that benefited banks and billionaires while impoverishing you, then you need to understand what comes next, because this was UNTA one-time event. It is how the system operates in every crisis. Subscribe now, because the next investigation reveals where the Fed is today, what's on the balance sheet right now, what's coming in the next crisis, and why the playbook will be exactly the same except larger, more brazen, more destructive to your wealth and standard of living. The Federal Reserve's balance sheet is still $8.5 trillion as of 2024. They reduced it slightly from the $9 trillion peak, but it is still double what it was before the pandemic, meaning all that money is still in the system, inflating asset prices and devaluing your labor. The national debt is $34 trillion. $1 trillion of that is annual interest payments that you pay through taxes to service debt, created to bail out banks and fund stimulus checks that barely covered 1 month of rent. The next crisis is inevitable because the system is built on debt that can never be repaid, leverage that can never be unwound, and monetary expansion that must continue forever or the entire structure collapses. And when that crisis comes, the Fed will print not for trillion, but 10 trillion or 20 trillion, because that's the only tool they have left, and the only people who benefit from that tool are the people who control it. You will receive whatever scraps they decide to give you, another $1,200, maybe $2,000 this time, adjusted for inflation, while they transfer tens of trillions to themselves using the same mechanisms you just learned about. And the inflation that follows will be worse than what you experienced from 2020 to 2024, because the currency debasement will be larger and faster and more desperate. The dollar is losing reserve currency status, foreign central banks are reducing Treasury holdings, BRICS nations are building alternative payment systems, the petrodollar system is breaking, and when the world stops accepting dollars as settlement for trade, the inflation will come home to America in ways that make 9% CPI look quaint. Your $1,200 was the price they paid to pacify you while they robbed you of your future, your children's future, your grandchildren's economic security, and they're betting that you'll never figure out what happened. Never connect the dots between the stimulus check and the Fed balance sheet expansion. Never understand that inflation is taxation without representation and monetary policy is class war by other means. But now you know, now you understand, and the question is, what will you do with this knowledge? Will you keep playing a game that S-rigged against you, or will you protect yourself by understanding how money actually works and positioning yourself accordingly before the next crisis makes everything worse?